This morning, the federal government taking extraordinary new steps to avert a major banking crisis following the collapse of Silicon Valley Bank. The government stating that it will ensure all of the California bank's customers will have full access to their deposits today. That includes 87% of deposits that are uninsured because they are above $250,000, the federal insurance limit. The government is also shoring up a second institution, New York-based Signature Bank, which has been closed, guaranteeing its customers will have access to their money. Signature is one of the leading banks for cryptocurrency companies. In a joint statement, the heads of the Treasury Department, Federal Reserve, and FDIC say the move is designed to protect the U.S. economy by strengthening public confidence in our banking system. The government says no losses will be borne by the taxpayer. President Biden tweeting overnight saying he's firmly committed to holding those responsible for this mess fully accountable.
We want to make sure that the troubles that exist at one bank don't create contagion to others.
SVB was the nation's 16th biggest bank and the largest bank to fail since the financial crisis 15 years ago. Unlike 2008, when the government bailed out big banks to avert an economic meltdown, Treasury Secretary Janet Yellen is ruling out a federal bailout of SVB. Why did Silicon Valley Bank fail? As a top lender to many startup companies like Airbnb and Pinterest, the bank was hit hard by the recent downturn in tech stocks, with higher interest rates causing the bank's investments to lose value. As some clients began to withdraw deposits, SVB stunned investors last Wednesday, announcing it needed to raise more than $2 billion to shore up its balance sheet. That triggered a run on the bank, with customers withdrawing a staggering $42 billion in just 48 hours before regulators took control of SVB Friday. Among the bank's customers, small business owner Amanda Babcock, who says her livelihood is at stake.
This is everything that we have saved.
And overnight, the largest bank in Europe, HSBC, announced it is rescuing the UK subsidiary of Silicon Valley Bank, which comes as a relief to many tech companies abroad. The British government confirmed it helped the purchase go forward, adding that no British taxpayer money was involved and all customer deposits were protected. And that's the key, guys, protecting those deposits.
Mm-hmm. All right, Steph, thank you so much. Let's get some perspective on all of this now from CNBC's Andrew Ross Sorkin. Andrew, good morning to you. So, again, we're going to be hearing from President Biden in just a few hours. We saw the action overnight. How concerned, how worried should Americans be who are waking up this morning to this news?
Hopefully less worried than they would have been yesterday. The goal here with what we're going to hear from the president in just under an hour now and what we've heard from the Treasury Department and Fed is to say, keep your money where it is, folks. It is now safe. The real worry over the weekend was not just that the Silicon Valley Bank was going to go under, but that smaller banks across the country could go under because people would take their money from it. We're living in an age of social media. This is one of the first times that people can literally take their money on an app. And last week, one of the reasons the Silicon Valley Bank went under, in fact, was because there was some smoke, if you will, but somebody screamed fire in a crowded theater and everybody rushed for the exits.
What will this mean, Andrew, moving forward for folks who do their banking at smaller banks like SVP?
Well, hopefully for the next year at least, and that's what the guarantee is, that no matter how much money you have at that bank, the FDIC guarantee used to be $250,000, but if you have more than that, you are guaranteed, you are fine. Effectively, they're providing a backstop, again, to effectively tell the public, don't move your money. And the reason for that is you don't want everybody taking their money and moving it all to some of the big banks like J.P. Morgan and Bank of America. Their brokers working over the weekend, taking phone calls from, thousands of people saying, please open an account. But the goal is to prevent that from happening and try to keep these regional banks in business.
Lastly, Andrew, there had been some comparisons made to what happened in this country in 2008. This, of course, the largest bank failure since 2008. Explain to people how this is so very different from what we saw in this country 15 years ago.
So this is different. First of all, those were investment banks. The other piece is that these bailouts, if you will, are not similar insofar as the banks are not staying in business. At least SVB and this bank, Signature Bank, the executives are not keeping their jobs. That was another element of what happened last time. But, there are still concerns about what happens next, and it is going to likely be, I hate to say, a bumpy ride, just hopefully one that looks very different from 2008.
Hopefully, indeed, my friend. CNBC's Andrew Ross Sorkin. Andrew, thank you, sir.
Hey, thanks for watching. Don't miss the Today Show every weekday at 11 a.m. Eastern, 8 Pacific on our streaming channel, Today All Day. To watch, head to today.com/allday or click the link right here.